Okay, a lot of you are confused. You're real estate team leaders, you're heavy in production, you're trying to build a real estate team, and on paper, your CPA or bookkeeper is telling you that you're making a good profit. The reality is they don't know what they're talking about in most cases. Very rarely, if ever, have I seen the correct calculation around what your true profitability is in your real estate business if you are in production. Now, if you're out of production, it's a little easier to calculate this, but the biggest problem I see for real estate team leaders is they aren't correctly calculating their true net profit. We call it adjusted net profit to understand the true health of their business. And when they do that calculation, I tell you, I've done this with so many real estate team leaders that oftentimes they're absolutely shocked, like to the point their jaw hits the floor, that they realize that they are not building a scalable model. They're building a business that will always rely on their production financially in order to keep the lights on. That's not an exciting thing. That's not worth time away from your family. And building a business that at the end of the day will not make money without you selling real estate. Now, you may love selling real estate. You may want to sell real estate till the day you die. But if you are building it where you're bringing other agents in and spending money on those agents to help them grow, you've got to make money off of their production. If you're not, and the money from your production is actually going to pay the bills to keep the lights on, that's not a business. You might as well stop, go back to being a solo agent, and be highly leveraged with admin and systems, and you're going to make way more money in less time. Otherwise, you're really just running a charity. So how do you know? You would calculate your adjusted net profit. This is going to help you determine if you're running a healthy model or not. Here's what it looks like. It's your net profit on paper. So look at your P&L. What's your net profit dollar amount? You're going to subtract your unrealized cost of sale on your production. In other words, the amount you would have paid another agent if they had done your deals. Then you're going to add back in any owner's salary that you paid yourself. Reminder, if you're an S Corp or being taxed as an S Corp, you should be paying yourself a market-based salary. And then you're also going to add in what are called any indirect expenses. We track all these for our clients, but these are those expenses that you run through your business for tax purposes only, right? You're only running them through to decrease your tax liability, right? It might be things like your health club membership, or maybe it's your vehicle, or possibly it would be any travel you're doing that really is personal travel that you're running through the business because maybe you went to a real estate conference, but you stayed an extra week. Well, is that really a real estate expense, or is it more personal travel that we ran through the business? Those are all examples of indirect expenses. So when we use that calculation, again, total revenue minus unrealized owner cost of sale, plus any owner salary, plus any indirect expenses, we come out with what's called your adjusted net profit. That's going to give you the dollar amount. Then you take that dollar amount and you divide it by your true total revenue, like top line revenue before broker got paid, before agents got paid. What was the true top line revenue? That gives you your actual net profit margin, your adjusted net profit. That's the true net profit of your business. That tells you if you're truly healthy. If that number is below 20%, ideally between 20 and 25, you are not running a healthy business, in my opinion, a business that's not worth building, right? You need to be in that 20% range. And if you're not there, one of two places is off. Either your cost of sale is too high, meaning your splits with your broker agents and referral fees are too high, or number two, you're overspending. It's always one or the other or both. And so that's where you can dig into it. Now, if you don't know any of these things and your books are not set up or you have no books at all, that's what we do. Simple Numbers provides real estate specific bookkeeping and financial clarity and advice on how to fix your problem if you have one. But first step is you got to understand what your adjusted net profit is, and then you go from there. So hope that helps.